Walmart. Is this a stock you should buy right now? That's what we're going to try to answer here in this analysis video. I like to simplify things, and I'm going to discuss 6 metrics in this analysis: earnings growth, PE ratio, dividends, return on equity, free cash flow, and intrinsic value. They're then put on a 0 to 99 grade scale so that it's easier to visualize the different numbers I'm going to throw at you in this video. The first 5 metrics mostly deal with how good of a business we have. No point investing if it's an undervalued piece of crap. That's why I save intrinsic value near the end. Earnings growth is by far the most important metric. A company that doesn't grow doesn't survive for long. Walmart has above average growth at 7.49% per year going forward. Pretty good for such a stable company with relatively low margins. For PE ratio, most people look at it as a valuation metric. I don't base my intrinsic value on the PE ratio. The PE ratio to me is a measurement of hype. Too high and there's just too many eager eyes on the stock. Too low and we might have a hidden gem. Walmart unfortunately has a terribly high PE ratio at 38.72. There's too many jumpy eyes on the stock, which is a sad indicator of overhype. Dividend should be an obvious metric and something a lot of people ignore. I'm going to put it out there. If you buy a stock that doesn't pay you anything, you're speculating. You're not investing. Walmart has a below average dividend yield at 1.42%. Since we're looking at a stable company, we should be looking at a better dividend. For return on equity, it tells me a lot about the management. It shows me how efficiently my investment dollars will be treated if I were to buy the stock. Walmart has good management with an ROE of 15.1%. Since we have an economically stable company, that's good news. Free cash flow is my way to quickly evaluate how dominant of a company we're dealing with. The more cash available, the better opportunity to buy other companies, the better to research, and more money for marketing. Walmart has okay cash flow to the tune of $11.98 billion. Not surprising for a low margin business, but disappointing because we're talking about one of the largest companies in the world. Okay, as I said, these 5 metrics we just went over tells us what kind of business we're dealing with. With a business grade of 55, we're dealing with an average business. Nice growth and ROE, but I'd like to see more cash flow and less hype. But before we get our intrinsic value, consider joining my Patreon and get access to every grade from every company I've analyzed. It's updated all the time. Go to patreon.com/GrowthShares or click on the link in the description. As I said, Walmart is an alright business, but let's hold off on that until we know our price. Nonetheless, Walmart is worth $119 per share. Right now, we're looking at a relatively expensive stock, too much priced in already. And now that we've got all the numbers down, we need to put it all together and get our final grade. Walmart has a final grade of 49, and that makes it a below average long-term investment. For me, the business is fine, but the price is just too much and I'd wait until some bad news until I jump into the stock. But hey, after this video goes out, anything can happen in the next few days, weeks, months, or even years. But long term is always longer than you expect. Keep this in mind. It took Warren Buffett 45 years to become a billionaire. Invest wisely, and as always, take care of your money.